Welcome back to Markets Today. We are at the sidelines of the investor briefing that was hosted earlier today by the KCB Group, announcing a 5% growth in terms of the profit after tax and a proposed final dividend of 2.5 shillings per share. Lawerence, take us through the numbers. What was driving these numbers? Maybe you could just give us an overview of this.
Yes, Mbida. So when you look at the PAT, which is usually where most analysts start,
Yes.
At 5% might look like a subdued performance. But I think I would want to look at the shape of the performance in totality. Top line growth, our net interest income grew by 15%. Our non-funded income grew by 23%, which means that we are actually driving growth from the right sources. If you remember, about 2 years ago, 2018 performance, the growth was good, but I did say that I was not comfortable with the source of the growth because it was more about cost cutting. Okay. Now we are doing a top line growth, so which means the fundamental part of the business is actually working. That was tempered down by one thing in particular, which is the level of provisioning that we did in 2019. We had a new product in the market on the mobile front that the first half of the year we were still learning the dynamics of the product, and we had to take a substantial amount of provisioning on that. Okay. We sorted out, tightened the rules on the second half, and that we are happy with the product where it is now. The second part was the general book, especially the corporate side, that we had to take additional provisions. If you look at our NPL coverage ratio, it has gone up, especially on the IFRS, which is the cost of risk.
What is the cost of risk now?
It's gone up to 1.8%. So that is really what's then tempered down the growth at PAT level to 5%.
So 5%. Do you expect this to recover, cost of risk to come down in the year 2020? Absolutely. All right. And what about the balance sheet? Maybe you can help us understand the evolution of this and the integration of National Bank of Kenya.
Yeah, so balance sheet, as we've grown, we are close to 900 billion now. And that's a big part of that was obviously the acquisition. So growth comes from organic and inorganic. We did acquire NBK, and that has reflected quite significantly in our balance sheet. Our deposits grew by 28%. We did say when we were making the acquisition of NBK that we are actually targeting the deposit franchise of NBK, and you can see in our books that is coming to be. And then on the loan front, about I think 15% growth on 17% growth on net loans and advances, which is what drives your performance in the P&L.
Okay, and what is the outlook? What guidance are you giving for the year 2020?
So 2020, we're looking at a growth of about 15% on loans, almost a similar amount on deposits. Our ratios, return on equity, we are looking to get to about 23%. Return on assets, about 3.5%. Okay. And we look at costs of risk of about 1.5%.
1.5%. So with probably some slightly higher growth on profit after tax. Would this translate to growth in the dividend per share? We did speak to one of your investors, and they said, if you're growing 5%, then why isn't the dividend growing 5%? How would you answer that?
We balance our dividend payout with the opportunities we see in the market. We have to play the long game. I do understand where it's coming from asking for a growth of 5% on dividends, but I would rather invest wisely in 2020 and give him a 20% growth in dividends in the future years.
In the future. All right, fantastic. Thank you for your time. As we come to the end of the show, maybe you can leave us with one parting shot for any of the investors who are watching this show.
Well, you all know what's happening in the markets as a result of the coronavirus. We've seen a lot of panic selling. I would urge investors to just play the long game. If you invest in the stock exchange, it's never about taking short-term profit. Coronavirus is here. It's probably gonna be a thing of the past by the second half of the year. So take a longer view in your investment.
All right. Thank you so much, Lawerence, for your time. There you have it, ladies and gentlemen. Play the long game. And if you're certainly looking for a dividend yield, KCB is one of the higher dividend yielding stocks in the banking sector. Based on this dividend payout, it's now at 7.2%. And if the market continues to correct, this could actually head towards the 10% mark. Question is, will you play the long game? Are you going to be a buyer? Engage with us on Metropole TV Markets today and also on our Twitter handle. Let us know what your thoughts are. Thank you and good afternoon.